I think it probably can. What they have to be careful about is being, a victim of their own success. They clearly have had a lot of inflows, particularly in the debt side, but also on the equity side. And that's understandable because in Indonesia, you have a situation where you have the survivors from the Asian crisis, which hit Indonesia disproportionately hard. They are good companies that tend to dominate their sectors. They were available at pretty reasonable multiples. And although the outperformance of Indonesia has meant that it's no longer a bargain in that sense, by the time we factor in how far interest rates have come down, then it really is still a reasonably attractive proposition. But I think the key thing to think about with Indonesia is that the economy has been driven by the private sector so far, really. Now, the government is starting to make some better policies in terms of deregulating. For instance, the stopping subsidizing the fuel price in Indonesia is a start. But there has been a relative inefficiency in spending what money the government has. I mean, the good side in that is that the fiscal situation is relatively healthy because they haven't spent all the money. The bad side is that they desperately need some of the infrastructure, particularly in and around Jakarta, where, if it rains, you can be sitting in a car for hours. So these are the challenges for them going forward, is to, really put in place an infrastructure or a background which will let that private investment really flourish. For most of what we do, we're really talking about commodity flow into China, and it's typically two commodities that we think about mostly in terms of investability. One is coal. China needs a lot of thermal coal for its power stations, and that's what Indonesia has. And we now have a choice of at least a dozen coal companies in Indonesia that are, many of them are pretty geared towards supplying China and also domestic power consumption, and India as well. The other commodity is palm oil. Indonesia and Malaysia are the key suppliers there. So that goes into typically cooking oil. Now, in both cases, we have to be careful about China in an attempt to stop inflation getting carried away, putting price controls on the end product, whether it's, packs of cooking oil or whether it's the coal that's going into the power stations, which will affect Indonesia as being the upstream supplier of at least a certain proportion of those items. In Indonesia, I mean, the consumer is still a very valid place to be looking for investment ideas, I think. There are a number of stocks that have exposure there. Now, the unfortunate thing is that, they are no longer a bargain, very few of them. But having said that, the demographics look reasonable in Indonesia. It's a big country. The logistics are challenging in Indonesia if you're a consumer-oriented company. If you have to have a supply chain encompassing all the islands in Indonesia, once you've set it up, it's difficult for people to come in and attack your competitive position. So we like that. Interest rates have come down so far that certainly the property sector looks relatively interesting. The prices of the real estate have not, although they have gone up a lot from where they were, they're still relatively cheap compared to, let's say, Singapore or China or some other neighboring countries. So I think that's a place that we like the look of. And just generally speaking, in commodities, we are constructive on thermal coal. There's a little bit of coking coal there as well, which we have an interest in. But these are interesting areas for us.